We want to record. All right,
Got it.
great. We want to record this because there's a lot of people that couldn't be here tonight, so they want to hear what we got going on. So let me just introduce myself to those of you who don't know me, and thanks for coming on to the call. I want to say thank you to everyone who's here. Many of you are investors with us in other projects, and I want to say thank you for your confidence and thank you for investing with us. We take it very seriously and definitely don't take it lightly. So, a little bit about me. I have been investing in real estate since I was about 18 years old. I bought my first rental property back then, and I have been through a lot of different markets, ups and downs, and have seen a lot of things happen throughout the years. And as I got older, um, I decided that I wanted to study and understand multifamily a little bit better. And so, probably about 4 years ago, I joined a group. I started studying multifamily properties. I started investing as a passive investor in multifamily properties, and and I really was. It was very fascinating to me how I could invest in it and get a higher than normal return on my money. And and so I did that for several years. And at this point, I'm probably invested in about 6 or 7 different deals across the country. Um, Probably about 800 doors. I think I estimated the value of those apartment buildings to be somewhere around 120, $140 million. So it's something that I saw could really scale, and I got very interested in it, and I started looking at how to actually do that type of deal. And so about a year ago, we found a small mobile home park in Lakeland, and we invested in that mobile home park. And a lot of you people that are on the call, thank you very much. You are partners with us in that deal, and I really appreciate that. But that was our first attempt at doing at actually being general partners on a syndication deal. Um, so it's not something that I don't jump into a lot of deals. I don't want to be a general partner on a deal that we can't uh, be close to and make sure that we can asset manage it properly. So I don't jump into deals across the country as a general partner, but this deal here came up recently, and I thought it was a fantastic deal. So with a lot of effort on our part, we got it under contract, and we've been working diligently to put everything together. And we finally got it all together in the last week. All the paperwork's together, the portals together. Um, Everything's ready to go. So we wanted to introduce this to some people that have invested with us before and some people that may be new to this process. And and so we put this presentation together just to kind of show you the opportunity. And this is something that may not be for you, or it may be something that you want to invest in. And so I'm going to introduce Tim Trimbath in a minute. He is a fantastic analyst. I've been working with Tim for about 7 years, and many of you know that I own a property management company. Well, Tim really is the operations guy. He is the one that really uh, manages and day to day does all the operations for that company. And so we partnered on the first project that we did, and he's been a fantastic partner on that. And so, with saying that, he's the one that analyzes all the deals and really pours over the numbers and then presents it to me, because I'm a number guy, but I don't want I'm not the guy that gets into the weeds like Tim does. And so I just want to give him kudos before he starts talking. He's going to do most of the talking about the project because he did all the analyzing on it, and he ran all the numbers. And I asked him, I said, please be very conservative on this deal, because because everyone knows the climate that we're in right now. Inflation is going crazy. Things just seem to be crazy out there. So I wanted to be very cautious about how we presented this, because I don't want to give you some pie in the sky and not be able to deliver it. So Tim was very conservative on it. Some of the numbers are way lower than what they probably will actually be, but I wanted to be realistic about it and conservative. So without much more, I'm going to go ahead and turn it over to you, Tim, and let you show us the property and the project that the business plan that we put together, and then we'll open it up for questions.
Cool. All right. Well, thank you very much, Tim, and thank you all for being here. Again, my name is Tim Trimbeth, and yeah, I'm an analytics guy. Let's get into the opportunity and the action plan for Thousand Roses. This is the property. Some of you have seen this before. The shaded square in the middle of your screen is the part that we're buying. Thousand Roses is actually two halves. So if you look to the left of that square in the middle, you'll see a couple little roads, like a little U. That's the other half of Thousand Roses. That's all subdivided out, and that's not what we're acquiring. So we're acquiring one half. This is the property by the numbers. It's 59 duplexes, 118 units, street address 455 Buckmore Road. It's in Lake Wales, built in 88, 10.87 acres. There's some really great things about this property. It's concrete block, which is good. And the roofs are all galvanized metal, and they were put on in October of 2022. So they're 18 months old, which is great because those are a long lasting roof, and that means less maintenance for us. This is the property from the street. Notice that the walls say Thousand Roses Retirement Community. We're going to get into that in a minute, but this is what it looks like from the outside. We're going to remove that retirement community thing when we get it. These are just some pictures, just take you through the neighborhood, let you see what they look like. This is unit 74. They are solid one bedroom, mostly 114 one bedroom units, 4 2-bedroom units, for variety, I suppose. There's another one. Some shots of the street, what the neighborhood looks like. It's pretty quiet in there. Give you a little history on the property and where it came from and how some of this came to be. The Grondins in 88 they broke ground on Thousand Roses, a father and son, Gary. Gary's the man that we're dealing with. He's the seller. He's in his 70s. I imagine his father's passed by now. They built the whole thing, and subsequently they sold off that back half, subdivided and sold it off. And we're buying again that front half with the 118 units. Gary is a really good guy. He has worked this place every day since 1988 and has not had a vacation. He told us that when we were there the first time we came to visit him. And take a look at the rents. I'm going to leave that screen up just for a second. These are rents from 2012, 13, and 14. These are for Thousand Roses mostly. They're all 2 bedrooms except for the Druid. And notice that, they're $625, $650. For a 1-bedroom, we would make that 5 1/4. So if you asked me 10 years ago, 12 years ago, what would a Thousand Roses 1-bedroom apartment rent for? I'd tell you about 5 1/4. His average rent price right now is $503. That's part of the opportunity we've got. For those around the country who's not real familiar with Polk County, Florida, we're in the middle of the state. We're in between Tampa and Orlando. We've been in the news recently for good stuff. We are now the fastest growing county in the US of A. Woohoo. You can see census data, $11.92 a month is the median gross rent for any rental unit in Polk County. Household income is about $61K. Our major employer and in our area is Publix. Publix is a supermarket chain, for those of you who don't know, and it's the largest employer in Polk County. They're everywhere. They're really good real estate operators is what they are, in addition to being grocers. Polk County School Board is the second employer. They're on par with Publix, and there's a Gulf, and it's Lakeland Regional Health, Walmart, Amazon, Geico. That's what folks around here do. Here's an infographic we got from the Central Florida Development Council. This is Lake Wales. So notice the median income is a little bit lower than Polk County at large. It's about $40,000. Now, on the bottom of the slide on the left, it says data is from 2019, 24, and 2020. So I don't know if that 40,000 is from 2019 or what, but even if it were from today, it would support a rent price of $1,350. And Thousand Roses may get there in the future, but so the folks are well able to afford the rents that we're going to talk about. So I'll leave this up for a second. Let's take a look at the folks in Lake Wales and move on. So who are we? Like Tim talked about, it's been my great honor to work with Tim for the past 7 years. I met him through Rotary. And when I met Tim, he is a prolific entrepreneur and real estate investor. So he had this company, Tager Capital, which he uses for opportunistic investing. He buys flips when they come available. I've seen Tim, who's also a general contractor himself. I've seen him buy burnouts where just the exterior walls were left, and he's put them back into awesome houses. He's done limited partnerships with Tager. And starting last year in May, we started our first syndication they told you about, Hoosier Park Fund LLC, and that's going very, very well. And that's how I came to be able to be a part of Tager. Let's see. In Tager with this deal, there's Tim Davis, myself, and David Sando. Sando's been working with us for since June, and he was a very accomplished businessman and a good real estate investor himself. That's how I met him, and it's been really, really wonderful having Dave work with us. He, in addition to helping me with analytics and carrying the water on all of our real estate business lately that he and I are partnered with, he's also the maintenance coordinator for all county. So he's a very busy fellow, and we're glad to have him. On the other side,
One of the things, can I interrupt for 1 second, Tim?
of course.
I see that you didn't have the slide on there, but Augie Bylot is also
Oh, yes.
one of the general partners. He's not part of Tager, but he is one of the general partners in this deal. And so some of you may be on this call because Augie reached out to you, but Augie has been a mentor of mine, and we've been partners in many deals over the last 10 or so years. So I just wanted to mention that before,
No, I'm glad
before
you
you
did.
moved on.
I'm glad you did. I'm sorry for the oversight. That's a
Yeah,
big
Augie couldn't be here because he is in Mexico right now on a wheelchair distribution trip, because that's one of the things that he loves to do right now is to give back through Chair of the Love. In fact, I am now on advisory board for Chair of the Love, and I help out with some of those trips. So so that's where Augie is right now. That's why he couldn't be on the call, because I think he's on an airplane headed to Mexico to deliver some wheelchairs.
Yeah, and he's a huge asset for us with helping with these deals. So that's our orbit for our side of the partnership. It's the GPs are 60-40 Tager and Augie, and then 40% Avani Residential. Now, Avani Residential is a really cool company, and its CEO is an old friend of mine and a huge real estate investor too, named Corey Donahue. Corey and I've been friends for about 20 years. What Avani does is they're using an innovative construction method with something called SIPs, structural insulated panels, to build communities. So they're building rental communities and houses all over the place with this technology. And the two guys involved with that are two heavy hitters, like I say, the Corey Donahue and then Dino Christopherakis. Dino was a big wheel with CB Richard Ellis. He's done a lot of real estate deals with them in Europe, and he's headquartered in Manhattan, and he's part of this deal as well. So now that you know the spheres of influence and the orbits, so because Tim's part of Tager, and so we are also part of All County. All County is going to provide the day-to-day operations for running Thousand Roses for us. So we're going to do all the things that are on that screen. I'm not going to read them to you, but the day-to-day stuff, making sure that we've got 3 jobs at All County. One is to make any client, whether it's a Thousand Roses or any one of you, as much money with whatever asset you bring us as we can make. We want to maximize your ROI. 2, we want to keep everybody out of court. So we make sure we keep you out of eviction court and civil court and criminal court as best we can. Let you know if you've got any kind of civil liabilities, fix this, or or we might get in trouble when we try to keep you out of that. And then the last thing is we want to make sure at all county that owning real estate doesn't become a part-time job for the landlord. So we do all those day-to-day operations so that the investor can go do the stuff the investor likes to do. On the other side, Avani, with Corey Donahue, Corey also is the CEO and owner of RYZ Construction. They are a wonderful GC and roofing company. I highly recommend them if you have any projects that you need done in Central Florida. They're an excellent contractor. Because Corey owns RYZ and he's CEO, he is going to provide maintenance for us at sweetheart prices that he won't offer anyone because he's part of the deal. So that's the partnership. We're providing the operations and RYZ is providing maintenance. Let's talk about the sales price. So we're getting these 59 duplexes for $8 million. That works out like 136K per duplex. I did this in March, so I used 180 day data, but noticed in the last 6 months, give or take, that there aren't any $136,000 duplexes around within 2 miles of Thousand Roses. So you can see the prices there. It's the third column. They median out at about 240K. We're getting ours again a little less than 136K. And we'll talk about why. The reason why it is not being sold at 136K, it's not because they're hovels or dilapidated or terrible. It's because they haven't raised rent in 10, 12 years, and they're not throwing off a lot of cash flow. I also looked just recently at comps within 2 miles for rent within 2 miles of Thousand Roses within the last 360 days. And I put in some 1-bedrooms that I found. Right now, Lake Wales is still kind of rural. It's not a huge place. There's not a lot of rent comps around for 1-bedrooms, but it is growing. There's an article that we can post on the website at Tager about all the new developments going in, and it's going to be booming soon. So that'll provide upward pressure on rents. That'll be good for us. There's where I got the rent comps from, so you can see they're not 25, 30 miles out. And this is what they look like. You've seen the units that we're buying, so I wanted to show that these places aren't markedly different. They're not Taj Mahals with marble flooring and all like that. They're just same as ours, pedestrian, nice, but garden variety units. So if they're getting $1,000, $1,100 for theirs, there's no reason we should keep our rents anywhere near $500. And there it is graphically. Another great thing about this deal is it's $8 million. The seller is going to carry $5.5 million for us. He's going to do that for us for 60 months at 5% interest only. So I looked at Lending Tree to see what a similar deal would be. They gave me between 6.25 and 8.7. So we're going to save quite a bit of money on interest payments while we get this done. So there it is. Low price per unit, excellent upside rent potential, good financing terms, and the contract's already done. The bidding started at 9, we got it down to 8, and we were very happy about all that. So what are we going to do next? We plan on closing on the property on May 28th. Once we do, there's 3 vacant units now. There might be 5 now, but there's 3 vacant units. Now we're going to rent those, begin marketing those at $10.95. For underwriting purposes, I put everything in at $9.95. We're going to try to get more. June 1st, we've got leases that expire in June and July. We're gonna have to go through the whole calendar year and get these folks off of $500 a month leases and on to higher amounts of rent leases. So we're gonna give out 60-day notices to the folks that are gonna renew in June and July, that they're gonna go from 500 to 8.25. Our assumptions are that 2/3 of them are gonna stay. The cheapest rent we can find in Lake Wales is $850 for a 1-bedroom place. So we're going to come in just a little under that, and hopefully they stay. But 20% we know we're probably going to go on their own. Just tell us they can't afford it or they won't pay it or whatever. And 10% might not do anything and make us predict for holdover. So those numbers are baked into the cake. We're also going to start the RUB system. If you're not familiar with it, I was not. It's ratio utility billing. Right now, the water bill is our responsibility to the tune of about $5,000 a month. What the RUB system will do is this company will use statistics and send out water bills to every resident and shift that cost away from us, the landlords, and to the tenants where it traditionally is in a lot of places. And then between May of this year and January of 27, our goal is to get these things up to 100% market rent. And because the name of this game is to get in, reposition the property, get the rents up, and get it sold before that 60-month window closes. On the turns of maintenance side, where Dave's going to be, we're going to take inventory. There's a clubhouse that they don't use anymore. And right now it's just a big storage bay. And it's got stuff in it, spare parts, sinks, some appliances, and we're going to put more stuff in there. We've got $10,000 budgeted in for repairs, but there's nothing to repair. So what we're going to do is we're going to use some of that 10,000 to stock up on flooring, vinyl plank, things like that, paint, which will last for 10 years unopened, and have materials on hand. So when we have these turns, as we go through these and raise rents, we'll have materials on hand. RYZ can come in and just provide labor at again, a really great price. And that'll keep our turn costs down. And again, RYZ is going to be our go-to contractor because of the pricing that they're going to give us. On the deal structure. So it's a 70-30 split. Members get 7% preferred rate, 70% of all cash flows above that up to the 15% IRR mark. And then above that, it waterfalls to 50%, 50-50 split on cash flows above the 15% IRR mark. Time horizon on this investment is 5 years. We want to get it done faster. And if we do our jobs right, we'll have a average annual return of 18.42%. S&P traditionally is about 14 and change, so we should beat the street. So I used to say in my old line of work. And we're projecting an IRR of 15%. And cash on cash, I have messed with a lot of slides and presentations. This actual cash on cash on this is about 7%, just over 7%. So please ignore that. Here are the numbers on the purchase side. As you can see, we got the purchase price of $8 million, $2.5 million down payment. There's a various fees and acquisition costs. We're gonna have a $350,000 operating reserve. We'll talk about why we're gonna need that in a minute. So we need just shy of $3.5 million to get this deal closed. And the return numbers are there again on the bottom. Here's our pro forma, our projections for the 5 years. Along the top, you'll see our projected average monthly rents. Notice they're going up in the right direction. Also notice that we've got 10% and 5% for vacancy and concessions that we don't expect to collect. I'll talk about that in a minute. So this pro forma says we're going to capture 85% of the revenues. I've also got $2,000 in there for other income. There is a laundromat facility on site. It's operated by a third party, and all the folks do their laundry. Well, all is a big word. Many of the folks do their laundry there. The landlord gets a piece of the revenue. It's probably more than $2,000 a year. I had a hard time finding what that number was, so I just threw something in there. So that'll probably be a little higher than that as well. Okay, so because of how tall this slide was, I broke it up into two. So take a look at that and notice the NOIs on the bottom. And then after the NOI, we got to do the debt service. So I'm going to move to that. So there's the NOI again for year by year, years 1, 2, 3, 4, and 5. It's interest only, so we owe $275 a year. And in that first year, because we have these very low rents and the interest only and the other expenses, our repositioning process is going to make us lose money in the first year. It gets made up obviously as we go, but that was the purpose of that $350,000 reserve. We want to make sure there's plenty of cash so we can do what we need to do, handle emergencies, and not have to come back to anybody for a capital call later. Also, the debt service coverage ratio is not great the first year, but it does get good years 2 through 5. And our goal, once more, is to get this thing repositioned and sold before the 5 years. So we're going to be aggressive on that. in year 5, it projected, but if we hit it earlier, we'll do it earlier. If we get to $750,000 and change in NOI, we can sell the property for 12.5 million. And that'll help us achieve the return numbers that we talked to you about. And when we do that, you can see what the members get. The members will get, again, that 18.42% annual average return, IRR 15%. And this is the correct cash on cash return, 7.09. We also ran it based on a $100,000 investment to make it a little more relatable. So if an investor was to come in with 100,000, they would get back $92,000 over the 5 years and achieve those same return figures. Graphically, this is what that looks like. There's your money in, money out. And the next steps for you guys, if you want to join us, you can go to tagercapital.com, and there's right on the homepage is an Invest Now button for Thousand Roses Fund LLC, which is open as of today. And you can follow the instructions. If you have any questions or want to talk to anybody about it, you can give me a call and I'll put my contact information out. And that is that. So let's go ahead and open it up for questions. Let me
And I want to say also that those slides are on the website, so you can review them anytime you want to. They are also on the cash flow portal, which is the company that we use for the investors. And so you can review those slides and ask any questions that you might have. So
now I am searching furiously because while I'm good at real estate and analytics, I'm not good at Zoom. Let me see how to unmute you guys.
I have a quick question.
Actually,
go ahead, Ivan.
Great. Yes, sir.
No, so we actually like the project very much. And I like that you're so conservative with the numbers. The only thing that I'm not so sure is conservative is selling at a 6% cap. What do you think? Because 6% cap normally I see like in a I don't know, like in Class A buildings and things like that. What's your opinion about that?
Well, that's just it. The cap rate is a lot of times it's an opinion. So you know, it's not something that's set in stone, and it changes too, depending on how cheap money is. So if money is cheaper, then sometimes the cap rate will follow that. If you can get 3% interest on loan, if you can get a 3% loan, then the cap rate's going to go down to match that.
And we want the $12.5 million strike price. There's an ace up our sleeve. In the numbers, notice that I told you that we're projected to collect 85% per month. We're going to have 10% vacancy and 5% bad debt. We don't really think that's going to be the case. We expect to get these things leased and occupied at a very high rate. And all county in our portfolio, even in COVID, when we shut down the planet, we collected 92% of our rents on time. And the ones that didn't pay on time, almost all of them paid before the end of that month. Right now, all county is collecting 97% of its rents on time. And a very, very tiny fraction is going to bad debt. So I think we might be able to, one, do better on the rent figures. And two, I know we're going to do better on the collection rates. So even if we have to sell at a higher cap rate, I still think we can achieve that $12.5 million strike price.
But thanks for that question, Ivan. That is a good question. Who else might have a question?
Hey,
So I have a question.
Oh, okay.
Okay.
Tina, you go first, and then Charles, you can go after Tina.
Okay, my question is that I don't know what is real, just echo. Okay, let me go to the other place. The question is that we have a 7% preferred distribution. Then you show the 70-30% split. At
Yes,
what point we do the third step? Are we doing the 70-30% split from day one, or
yes,
we?
yes,
Okay,
Tina,
so
that's the way that it will work until we reach an internal
mhm,
rate of return of 15%. Now, that probably won't happen until we actually
mhm.
sell the property.
Okay,
So
so
it's
if you hypothetically you collect $100 or rent, so 70% cash flow, okay? The cash flow, 70% go to um the LP, 30% go to the GP. Am I
correct.
correct?
Yes.
Okay.
After
Then
the
what about the 7% preferred return? What does that mean there?
So the 7% preferred return is what the limited partners get first before anybody else gets anything. So the general partners won't get anything until you at least achieve your 7% preferred return.
Mm-hmm. Okay.
Yeah,
Okay, so
on
that comes out first, and then it's a 70-30 split after that.
Okay. Okay.
yeah, and
So for
in
$100 cash flow, the 7% go to the LP, and whatever is left, 70-30 split. So
No,
that's a little bit confusing. Yeah.
7% gets paid to you
Mm-hmm.
out of the money first. So let's say if you had $100 in cash flow and we
Mm-hmm.
haven't met your 7% yet, you would
Mm-hmm.
get all of the $100.
Mm-hmm.
You would get 100% of the $100. And it's kind of spelled out in the
Mm-hmm.
documents.
Okay.
When you read through there, it specifically says the first 7% goes to the limited partners. And once that's 100% paid, then anything above that will be split 70% to the limited partners and 30% to the general partners.
Okay. All right. Until you reach 15% IRR,
Until we reach
then
a
you.
15% internal rate of return. Yeah, and once that's
Mm-hmm.
calculated, then we'll be able to drop it down. It's called a waterfall. We drop it down to a 50-50 split once that's calculated.
Okay. All right. Thank you.
Mm-hmm. Go ahead, Charles.
Hey, thanks for the presentation. Two questions. Can you elaborate on this utility conversion that's gonna put the bills on
rubs?
the
Yeah.
tenant?
Yeah, the rub system. So here's the deal. Right now, water and sewer is paid for. They have one water sewer meter. Okay, so it's all paid for by the current owner. The rub system is a system that has been developed. It's approved to use in Florida. There's some states that you can't use it in, but in Florida you can use it. What they do is they take some statistics. So let's say you got 2 adults living in the property. Well, they say that 2 adults will use X amount of water. And so they'll take the water bill and they'll say, okay, your portion of the water bill is X amount. And they will do the math and calculate it up through their software. And they will send out a bill to the tenant for their portion of the water. It's legal. It's totally legal in Florida. We can't do that unless we hire a third party to do it. I can't say, okay, you use $35 worth of water this month and we're going to charge you $35 for the water. But this company can do it because they have the software, the algorithms to do it, and it's been approved. So what's going to happen is as we renew leases and as we put new tenants in, the new tenants will be responsible for their water. We're going to have to pay the other water until the leases cycle through and all that happens. So we're going to have that expense for a while, but it'll eventually go away, and the whole burden of the water bill will be back onto the tenants. So that's a big value add for us because it's all that money is gonna be added to the bottom line.
Okay, thanks. And what's the timeline for this funding?
To work for the deal,
Yeah, for the investors.
May 28th is the scheduled closing date right now.
Okay.
We're looking about 30 days.
Anybody else have questions? And if you don't want to talk about questions now, feel free to give any one of us a call. Anytime, because
Got one question.
sure.
So, the new roof is an amazing plus. Can you comment a little bit more on deferred maintenance on anything else relative to the units?
We're not aware of any deferred maintenance. Like I said, Gary, and right now there's payroll for Thousand Roses that they have. They've got a handyman on site. In fact, his name's Terrence. He lives with his mom or something like that. He lives in one of the units, and RYZ is going to look to hire Terrence so he doesn't lose his job. He already knows everybody, and he's going to be on site. But Gary and Terrence every day go around and fix stuff, and they buy what they need and they get it done. And we've had a sampling of these units inspected. They pass with flying colors on the HVAC system, electrical system, the plumbing system, and the roof. So we do not anticipate a lot of maintenance going in. We don't see a lot of deferred maintenance. The units are simple but clean, and they seem to be very well cared for.
And something else for those of you who are not investing with IRA money, if you were to invest with regular capital, we are going to be doing a cost segregation study, and those roofs being brand new like that, we'll be able to capture that and do a accelerated depreciation on it. So everyone will, on their K1s, will be able to participate in that depreciation. And so that's going to be a big benefit. If you have income coming from other sources, you can take that depreciation and put it against your income and pay less taxes.
How
So
about that?
anytime you pay less taxes is a good thing, right?
So a question. So how much did accelerated depreciation you expect?
I can't give you that number, Tina, because I don't really know how they do that. I talked to the guy. I had him do that on one other community that I own,
Mhm.
and he got me a really big tax break. I think my CPA Paul is on the call here, and I mean we got a really nice tax break from doing the cost segregation study, and I mean it's just a very powerful tool to use if you're using IRA money, it's not going to help you. It's not going to be a benefit to you. But if you're using money other than that, you can use that and take that off your taxes.
So can you find out, or your
I won't be able
CPA
to,
Paul?
yeah, I won't be able to find out until they actually do the study. So
Mhm.
we're going to go ahead and order it done. So it's done for this
Mhm.
year.
Because it's going to make a difference in deciding whether we want to use.
It'll be a significant tax break. I don't know, Paul, can you speak to that at all?
I don't know. It's property by property, I know
Yeah,
you got a huge write-off before.
yeah. I mean, it could be, you know, I can't really give you a number, but I know once they do it, I was really surprised. On the property that I did. Now I do own this other community. I own 100% of it, but I believe we got maybe I don't know.
That's around 300,000.
$300,000 tax break on it.
How many units are in Leland, Tim? Do you remember?
30
30.
doors.
Okay. And we have 118 here, so
Yeah.
don't know if the math's gonna work precisely, but it should be better.
Yeah. I mean, it's property by property, and they're really gonna look at all of the components. And then they take those components and figure out what they're worth and how quickly they can depreciate them and then they come up with their number. I don't really know how it works. I just know it does. And I'm glad.
Yeah, thank you.
Sure. Anybody
Tim,
else?
This is Jimmy Lovely. I have two questions or two
Hey,
and a
Jimmy.
half. Hey, so the question number one's easy, which is, have you guys diligenced the leases to make sure somebody doesn't have a 3-year lease? I mean, you're assuming you're gonna be able to do fairly rapid turnover. Do you have a rent roll that lays out maturities of all the leases?
We do, and there is no nothing beyond 12 months. There's no
Okay.
2-3 year leases.
And
nothing
then-
like that.
The second question, which is kind of, it's kind of a couple of problems, but one is, what happens if you get to year 5 and, we're at 10% inflation because we keep spending money that we don't have at the federal level or whatever? And so you've got a 5-year balloon, and let's say cap rates are 8 or 10%. Like, what's the game plan at that point? Are you going to refi? Are you going to try to sell even though you're not going to get your 12.5 target? Are you going to come to us for capital? Because I thought I heard somebody mention earlier capital calls, which is something I definitely would want to know about. Like, beyond the initial investment, is there calls for capital?
That's not our plan. The answer to your question is, we have a couple of different things we might look at. One is to purchase an option when Tim's in talks with the seller now.
Yeah, I'm negotiating with him right now to get a couple of extensions.
Okay.
Purchase option.
And that's part of it. And then Tim, we ran some numbers on that. So go ahead and tell him, Tim, what you came up with.
Yeah, the answer is, and I appreciate your question, and I appreciated your email because it made me think about that a lot. So sincerely, thank you. The answer to the question is, it's not great for the return. It's if we got that extension option, your IRR, the longer we hold it, lower the IRR. So the risk is that if we had to refi at the end of year 5 and go into year 6, you get your capital back and maybe plus. We want to give you your capital back plus. So the answer is your returns would diminish, and but we don't anticipate any capital calls, Jimmy, or negative returns.
So let's talk through the good scenario where you get to year 5, you do your refi, it's what you hope for, or maybe it's a little less, but everybody's still happy. So what happens? I mean, what happens at year 5? Are you going to sell the property to third parties, to an affiliated party? Are you going to just refi and distribute the cash? Like, I'm trying to understand what happens at year 5, even if your scenario
Between year 3.5 and 5, our goal is to sell the property and get out of it and distribute the profits, give it the capital back, distribute the profits among the members, and make everybody happy.
Okay, and the sale is third-party sale or to affiliates?
Yeah, no, we don't.
We don't have a buyer in mind.
Yeah, we're not planning on taking it over as an affiliate or anything like that. It will be a straight sale to uninterested party.
Yep.
Yeah, well, I mean, I've seen both ways. It's just if you're gonna sell to a related party, you gotta have an appraisal to support that.
Correct.
Objective.
Right.
Okay, but there's not a world in your mind where you do the refi, distribute the cash, and the property continues to be operating. You're looking at exit.
Pledge a certain amount of
It's not a world we want. No,
other weeks to fund it. It's as long as it's
we're looking for a sale.
Okay, thank you.
Thank you.
On
Anybody
the, on
else?
the portal, Tim,
Yeah.
on the portal, how long after we sign in and make a pledge on a portal do we have to deliver the funds?
Well, like I said, we got to close on May 28th, so we're looking for the funds, over the next, say, 20, 25 days. We need just, like I said, just shy of 3.5 million. And we've had a lot of interest in the project. This is not me trying to be salesy, but when we get that 3.5 million in the bank, if there's anyone who has pledged but not funded, we wouldn't be able to take that investment. It's kind of on a first come, first served basis.
We can go ahead and set it up and not fund it for 2 weeks. 2 or 3 weeks. 3 weeks.
Anybody else?
All right, if there's no other questions, Tim, do you have the link set up?
Yes, if anybody wants to learn more, look at the docs, or invest, you can go to tigercapital.com. It's like tiger with an A instead of an I. tigercapital.com, and there's a button right on the homepage. Take a look, and then you can anyone can reach me at All County. My direct extension is 107. And so if anyone wants to talk or go over numbers or whatever you'd like, I'd be very glad to speak with you and answer any questions you might have.
All right. Well, thank y'all for coming,
Thank you very much.
and we really appreciate you. And have a great evening.
Thank you so much.
Thank you.
Thank you very much.
Good working with you guys.
All right.
Thank you.